There's a couple things you want to look for to ensure these things are clearing out, eliminating, or certain things are just carrying through from a consolidated standpoint. So one example of that is to make sure your intercompany activity, your receivables and payables all net out, because from a consolidated standpoint, there is no intercompany activity or intercompany payables and receivables. You're one economic entity. So in our balance sheet here, I want to make sure I net out all the intercompany payables and receivable between Parent Incorporated, Sub LLC, and 100 LLC. Another thing that you might want to set up, if you do not currently have it set up, is a intercompany report. Basically, you're going to set up the due tos and due froms and just make sure they net to zero and they equal each other. Normally, if your payable and receivable don't equal each other, you're not going to balance on your balance sheet. And if you don't eliminate every portion of the intercompany payable and receivable, your balance sheet also is not going to balance. Those are some checks to have in place to ensure that your intercompany activity, when you roll up everything, is getting properly eliminated. All right, next part we want to look at is to make sure all our elimination entries are in, because from a consolidated point, you have no investments in subsidiaries. They are one economic entity. This does involve eliminating the equity section of your subsidiaries. Now, we do have non-controlling interest because we do not own 25% of Sub LLC. So let's back out the portion of Sub LLC we do not own. All right, that's our non-controlling interest. So I've put the elimination entries into our balance sheet. So the income statement, we want to eliminate the equity income because the full results of those two entities are now reflected in the total consolidated income statement. Also, since we only own 75% of Sub LLC, I need to back out 25% of their net income, reflect the portion of Sub LLC's net income that outside owners retain. Next, you want to make sure your retained earnings carries all the way through. And when I say that is basically Parent Incorporated effectively through equity income, if we're just looking at them as a standalone legal entity, has recognized the net income and the activity related to the subsidiaries through equity method accounting in the investments. So the retained earnings or in the net income in this situation should be identical to Parent Incorporated as a standalone legal entity. So that's a good check to determine that that has carried forward properly. Now, the one difference, the one caveat that we have with the consolidated financials is the non-controlling interest. The last one that should be very obvious, but it can get you because you've thought about a lot of other things up until this point, is to make sure the balance sheet balances. That is the most critical part of this to ensure everything is flowing through as it should and you haven't missed anything. If your balance sheet doesn't balance, it's a clear sign that you have something that is off. That is consolidating accounting, taking your organization's chart, your legal entities, and then layering all the pieces to ultimately get consolidated financials. Hope this was helpful. I'll see you in the next video. Take care and goodbye.